So the money printer is back on with the empty money supply. We're hitting a record $22.2 trillion. Who saw that one coming? Oh yeah, the whole freaking world saw that one coming because you can't stop once quantitative easing starts. It started back in 2008. Make sure you guys go read the book Lords of Easy Money because that's how it describes the start of the Fed, Jerome Powell's career, Jenny Yelling, all that. But we're going to be talking about what this means for the economy, what this means for the stock market, and where things could be going. And again, this is not a 22.2 trillion overnight. This is like the slow boiling of the frog from the beginning of the year, but it's still boiling frog. So throw down in the comment section below what do you think inflation is going to do. And we actually got PCE numbers this Friday that we did not cover. So I don't know if you saw PCE, good sir.
Yeah, no, so I did not see PCE so far
Ooh.
this
So
past Friday.
what do you think it came in? Flat, above expectations, below expectations? Does not matter at all. What do you think?
Well, seeing how the market reacted, I would say that it came in at expectation,
All right.
if I'm not mistaken. If anything, just a little bit above,
So
but
it
I
came
think pretty much
in
at expectation.
exactly flat.
Yeah, that's what I thought. I
Yeah.
mean, you got CPI coming in flat, so I'm just going to assume that it's also coming in
Yeah,
flat as
trekking
well.
up to Jerome
So,
Powell's expected number, right? He expected 3.1 core inflation by the end of this year. So we still got a couple months, right? We got like 4 months more of reporting to close out the
right.
year where we can get to 3.1. So basically just a middling of inflation. However, I would like to point out that crude oil, which we track extensively on this channel just because it affects inflation so much, is doing but fudge nothing. And
Yep.
I'm just like, sitting here debating, and I want your thoughts as well. To me, it's
Sure.
like this could be a W, this could be an M kind of form, another W, an M forming kind of here. I'm like, oh, it's all over the place, and I don't think crew traders have any clue what they want to do because, like, we're seeing these massive builds in inventory, we're seeing these massive shortages of inventory, we're seeing global tensions spring up, then fall back down. The one thing that I'm actually thankful for is natural gas prices going down a little bit, kind of middling back down towards the September August lows, because as we've seen on the latest inflation numbers, this thing has been pushing up
Natural gas
extremely
has been the worst.
and
Yep,
it's
natural
going into
gas has
winter.
been the worst,
So if you guys want your
and it's
heating bill
going
to
to
be
in winter.
lower, hit that like button down below. Or if you want a cheaper gas price, hit the like down below. Maybe we can actually get crude oil down to $56 a barrel, which would be fantastic because drill baby drill is the motto of the current administration. And with any natural gas, any crude production, you get natural gas. So I'm just hoping
As
that
well. Yep.
the prices fall off a cliff, right? And I know everyone that like owns oil companies wants to be like, no, 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 you don't want to. I'm like, they
I mean, I
kind
don't
of,
personally care. I don't
yeah,
personally care if oil crashes. That would, if oil crashes, then great. Honestly, because then you could just buy oil companies at a much cheaper price.
there you go.
The fact that oil companies fall, like the stocks fall, like your Chevron or your Exxon Mobil's, they fall because of crude oil. All that means is buy more because it's nothing to do with the company. It's everything to do with the commodity at that point.
Yeah,
So it's actually pretty good if oil were to crash and
yep,
stocks like that were to also crash too.
yeah.
But I want to go back to the graph that you had at the beginning of this
The
video
good old
because
M2 money
this
supply.
is this is this is catastrophic because this is a complete repeat. It's
No, no, no,
almost
no, no.
one
What
to
do you mean?
one.
Jerome Powell,
No, 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 no. It's almost
2022 to 2024 doesn't exist. What are you talking about? The Fed doesn't.
what did look at that massive spike right there. When
No,
was
no, no,
that?
no, no, no.
Right there, right there. When
We
was that? Because I,
had
I actually can't see it. No, no, I actually can't see it.
okay.
When was that? When was
That
that big spike right
January
there?
2020.
Perfect. So,
But look, look,
what
look, look. Huh,
happened?
huh.
What occurred? Go on.
But it was 15 trillion dollars in about December January 2022, and then Donald Trump got into office, and it was 20,000 because he printed all this money. Nothing happened in between here. That doesn't exist. What are you talking about?
That doesn't exist. Right, right, right.
As
But
Jerome Powell would
even
say.
though that doesn't exist, even though that right, it's transitory. But even though that doesn't exist, even though that doesn't exist, we are literally seeing an exact copy of what we saw in 2020.
Yeah.
I said a lot of people question me. when I bought this house that I'm currently in the process of buying, a lot of people were like, "Well, why did you just wait till interest rates drop?" Because when interest rates drop, pricing of those houses are going to go through the roof. And then what are we seeing right here? So you got the trifecta, or sorry, you difecta. You got
Trifecta.
the no, because it's not three, it's two. But you got the two things going on at the same time. Lower interest rates, not by much, granted, not by much, but at the same time, you got lower interest rates with an increase in money supply. What happens when money supply increases, people?
Prices go up.
This is the financial illiteracy. This is the financial illiteracy when it comes to just basically 90% of the population. I'm putting it at
That's why
90
we're here.
because people right now have been saying inflation's too high. Inflation's too high. I'm like, first of all, it's not inflation. It's the inflation rate. That's the first thing. And number two, when in 2020, when we had that massive inflation going up to 9%, the issue had nothing to do with tariffs. It had everything to do with what? Money supply. Because at the end of the day, the money supply is what causes inflation. If you have more supply of something, this would automatically devalue that something. Make sense? Right? So obviously, if you have now more supply of dollars, this means that the value of said dollars go down, meaning now you have the same amount of you have the same amount of stuff that those dollars are now chasing, but you now have more dollars, so now it costs more dollars to get those same amount of stuff. It's the exact same thing that happened in 2020. And people are saying, oh, but inflation is so high right now. It really isn't, guys. It really isn't. It's gone up by what? 0.9, 0.9% in what, 9 months? That's not a lot. In the span of what, like a year, we went from 2.5%, right? 2% to 2.5%, all the way up to 9 in the span of like what, 2 years? Right? If I'm not
It was a
mistaken.
year. It was almost
It was a year.
it was a year time frame from
It
two to
started,
nine, peaking out,
it's-
and then
it started in 2021 and it peaked in 2022, if I'm not mistaken.
yep.
That's when Powell started raising rates. So in 1 year, from 2 to 9%, but people are freaking out about 0.9 of a
Yeah,
percent increase
they're also
because
freaking
of
out about this, right?
tariffs. It's just
They're
like, it's not even that bad.
they're freaking out about this right here with the PC inflation coming in at roughly in line, and everyone's saying like, oh, Powell with 3.1 3 point was it 3.1 expectation for inflation, and I'm just
Mhm.
like, that's not even that much when it comes to how to put it it doesn't that much in terms of where we were or where we're going to when we had this massive boom, and right, like interest rates have been this long for this period of time. I'm like, I disagree with you about like it's not a trifecta. To me it is, because
Well, what's the third part of it?
jobs, people are
Okay,
not
fair
able,
enough. Fair enough.
yeah,
Fair enough.
job
Fair
people are
enough.
not able,
Fair
and
enough.
which is a perfect segue into the next thing I want to talk about. But I do want to mention the Michigan expectations. Consumers are feeling more happy right now because they are actually expecting inflation to be lower in the future than previously expected, which kind of becomes like when the whole media puts out this narrative of like inflation's coming, okay, job market and all this, and the Fed's going to cut rates, right? Where I'm not paying, instead of paying like 25% on the credit card, you're paying only 23%, right? That's to me and you, that's absolutely crazy. But to the average American, that's actually like a relief, right? Because of how indebted America is in credit card debt. But I do
Mhm.
want to talk about the jobs prediction for next week. This is
Sure.
going to
Oh,
be
that's
spicy.
right. That's
Yeah.
right.
It surprises us every single time the job numbers come out, because it's like we completely forget, because it's like so much news in between. And it's like, oh, it's job numbers week. So every time
Yeah.
I cover this, Jolt job openings expected to be 7.15 million jobs. I still call BS on that, but then again, I'm actually seeing a lot more postings. So again, they're inflating the number through that, but the hiring rate is just absolute crap.
It
Which
is.
brings us to point number two, ADP non-farm payrolls. And actually, I'm skipping ADP because that's trash.
It's
Non-farm
stupid.
payrolls,
Yep.
51 and 35 respectively for non-farm and private. Very close to that negative number territory if you miss like the last time. Regardless of
Bro,
whichever way you slice it, the number you get is bad either way.
51,000 expected.
Mm-hmm.
51, not even triple digits.
Yep.
51. Well, it is triple digits. It's more
We're
than
counting
triple
pennies
digits, but
now.
you
We're
know what I
not we're
mean.
not counting
Right.
dollars, we're counting pennies now.
Bro, that is ridiculous. And if it comes in lower than 22,
What
like
if it
how it
comes to the
was
negative?
in,
How does
if
the
it comes
market
into the
take it?
negative,
How does the market take
it's
it? Do they take it as a good news? Is good news, bad news,
I,
bad news, good news now?
I would actually take it. Well, what I would think is they would actually take it as positive news.
Yes,
And
because
here's
the
the
Fed
reason
has
why.
to
Pivot.
cut rates and
pivot,
pivot.
pivot,
Yep.
pivot from interest rates to now jobs.
Yep.
So again, and this is something that we've been saying here on the channel. It doesn't matter what the numbers come in at. What matters is the narrative. If the market perceives the narrative to be, oh, negative, bad jobs numbers mean Fed cutting rates or focusing, switching mindset from interest rates to
Pivoting on the
job to
pivoting on the
job
dual
numbers,
mandate.
right, to job numbers, that's actually positive. But here's also the thing, they could also take it like this. If it comes in way lower than that 51,000 that they are expecting, something's broken. Panic sell, right?
Yeah.
So it just depends what the narrative is. I would actually argue that you want a sweet spot. You want it to be lower than the expected 51,000,
But
but you
not
want it to
zero.
be coming in just right at that 22,000 mark, maybe 25, maybe 30, maybe 40, right? But nothing too low. If it's massively in the negative, that could cause them to panic
Yeah, but
in the sense
let's
that something's
define that.
broken.
Let's define that. What would you say is like massively in the negative, right? Like what's the number you're looking for?
I would say anything lower than 10, if I had to guess. 10,000. That's what I mean. Like it
I would
can't.
say you a negative 50. I would go to the
But
opposite spectrum
well,
and
sure, but the question is not how far in the negative. The question is when does the narrative turn sour? You get me? Because the narrative can turn sour at any point. So
yeah.
what I mean is the market could perceive even a positive number still bad if it's lower than what they wanted to be.
Yeah, but
Does
I
that make
think they're
sense?
so right now, right? If you were several months into bad reports, I would agree with you, but I disagree because of how this, like, to me, it's going to be more of like it has to be a significantly bad number this report, right? Next report and the report following that, if we get really bad numbers, then I would say I agree with you. But
I just don't know
because
where that threshold is. What I
to
would
me
say is
the
I don't know where that
threshold
threshold is.
is extreme, right? Triple digit negatives where the media would basically to have a field day on the expectation of interest rate cuts to basically be like something broke, right?
I,
Like
I
to
just I just
me,
don't think the threshold is that low. I think the threshold is a lot higher.
I
The
think
threshold
because
is a lot
they
higher.
pivoted the narrative, right? You're on the pivot right now. I think that threshold is extremely low because everyone is
Mm.
expecting bad job numbers. When you go 2, 3 months down the road and continue to have bad numbers like negative loss of jobs continuously month over month over month as interest rates are going down, because then it would that the narrative would turn from this. Let's say we get a negative 20, negative 30, negative 40, negative 50. The Fed then expects to cut 50 basis points or even 75 gets thrown on the table for argument's sake. If the Fed does that and then you don't see a resurgence in the number in the next preceding month or two, and then you get more aggressive rate cuts expectations while you're getting these rate cut expectations, right now we go to 50 basis points and we go to 75 and the market is not recovering or there's no signs of recovery, unemployment starts to jump up, then I think everyone hits the panic button. I think that because they're very tolerant to negative job reports because the narrative has been communicated to them. The narrative of the dual mandate is no longer intention was said. That we
Mm.
need to pivot to the jobs numbers versus the inflation narrative, because inflation, we're saying that it's a one-time tick right now, right? So they can use that transitory lie, as we say, about the tariff inflation is going to be transitory, whatever you want to chalk it up to, right? But to me, jobs are more important than the expectation for interest rates, right? Like that, jobs is going to rule the world right now because
So so let's assume that we do head in that direction where the
Mhm.
Fed is forced to basically cut interest rates not by a stupid 25, but by like 100,
Yeah,
right? 75, 100.
emergency cuts basically.
Emergency panic mode. What's that going to do with now an increase in money supply and now a massive
Oh,
rate cut?
you would monetize the
You would
markets.
you would get the exact same thing
Yeah,
that happened in
yeah,
2020.
you would get
Meaning that by
you would get this.
2026, by 2026/2027, a year from now, you would have the exact same scenario that we had in 2021 to 2022.
Yeah, fully agree. You would basically they would monetize, they would the rescue they be the lender of last resort. Their piggy bank has run out, and we actually didn't cover this, and I didn't even
We have
mention it
not
to
covered
you.
this in a while. I have not covered this in a while.
Not this one. Sorry, this one. Their piggy
The
bank is
repo, yep.
zero. They got 21 billion to their name to rescue the bond market, and so Scott Bessent would have to actually be the lender of last resort. They would have to go to emergency funding in the treasury in order to be the lender of last resort if they wanted to keep interest rates where they were, aka we can't keep interest rates where we are right now, and therefore we need to cut rates immediately, like to back to like crash levels.
So we need to cut rates, right? We need to cut rates ASAP. And on top of that, we got to print more money, which would then cause more inflation, which means things are going basically we're going to see a repeat. I would not be surprised if in the next 2 years, right? 2026, 2027, we got 9% inflation, 10% inflation. I would not be surprised at that point. And then what do you do?
Well,
What do you do?
it's a possibility, right? It's a possibility, but let's also not throw out the possibility that the yield curve hasn't even uninverted severely from where it was, and it's just been doing loop-de-loops, for lack of a better term. But as someone would say on this channel, and enrage me to no end about being right about that. And what's your prediction for this thing? Because apparently you've been like the yield curve whisperer on this channel for God knows how long. So
Ever
which
ever
way is it
since
going?
ever since it uninverted, um, yeah, ever since it uninverted, I have just been stopped. Like I haven't made any. I haven't.
I know. That's
Yeah,
that's
I
why
don't
I'm
really
like,
care about it
we're
anymore.
it's like it's gonna do this. It's just gonna go like
It's just gonna go all
it,
around. Yeah.
it doesn't actually matter anymore, honestly, because like at this point it should have like started dropping off a cliff like we've seen previously times here. Some could argue that it's gonna kind of like do this, but again, I'm looking at it like the writing is on the wall, and the Fed's not necessarily fighting the narrative. They're giving us the rate cut expectations that we're expecting again for December, being two rate cuts of 25 basis points each. I
Yeah,
don't know.
I don't know. Yeah, I don't know.
To me,
All
it's very, very interesting to see what's going to be going on. It's also going to be interesting. We're going to get housing data this week, so we're going to see if this thing is going to follow seasonality or is it not going to follow seasonality, and home prices are going to go up because, again, like you said, interest rates are down. What, 25 basis points? Everyone got 15,000, so houses are up 15,000. I love that
right.
short, and I need to go find the link for it.
And let's also not forget that we actually have a government shutdown looming.
Oh yeah, what is happening with that thing?
So it's basically Chuck Schumer wants to add to a bill or add to the funding of the government of a bill that would give illegal aliens health care. And the Republicans are like,
So we're gonna take an
no.
insolvent government and make it more insolvent?
Yeah, basically. Could you imagine if we ran our lives the way that the federal government does, and then we just be, I don't know, the government's doing it. Why can't I do it? Do that to
Rules for
your
thee, not for me.
yeah, yeah. But is there something else that you wanted to show regarding states specifically?
Yeah, so it's kind of interesting. I was looking at this, and you kind of comment on it before of how this map is kind of shaping out. Where I'm still surprised that Florida is like this high move to state, considering everything that's down there. And I'm like, I kind of expect South Carolina. I understand Georgia. I truly
People are
understand
leaving.
Georgia with
Yeah.
their high tax state. South Carolina makes sense because I live in it. And then like kind of like Texas kind of calmed down recently, like, but Florida has been staying strong for quite some time, right?
It has.
New Jersey shockingly turned from light blue to actually like move to state, which is I'm attributing it to the New York thing. And surprisingly, you mentioned Pennsylvania has actually gone slightly blue. People moving out. To me, I
Yeah.
think it's more of like they're tired of the cold, and you got more retirees that are kind of moving down to Florida and
I
stuff like that.
guess.
That's what I attribute it to because there's just a general slowing, right? Like when it does the move to from, right, that it's on a percentage basis. So you don't really have this mass migration right now because the job numbers are absolutely
Not
crap.
really. Not really. Not really. It's actually right now more like standard, right?
Yep.
Usually you're gonna have your influxes, you're gonna have your you're gonna have
Oh,
your changes, people moving to, people moving from. But the fact is that the fact that Florida is still like that, which is
yeah.
fairly surprising, especially since we are heading towards hurricane season like right
Yeah, there's
now.
one coming for
So
South Carolina possibly right now. So it's like,
yeah,
yay! Luckily, it's the coast. It's not going to hit mainland. So, um, anyway, last but
that's
not
all interesting
least,
nonetheless.
what do you think
Yeah.
this is going to land at this week?
I didn't even realize it was a 53.
Yeah, equal playing field, fair game for both sides.
Well, earnings hasn't even so next week I believe is earnings when earnings season
2 weeks.
starts.
2 weeks.
The only 2 weeks. The only one of prominence that we have coming up this week, the week of September 29th slash the first week of October, kind of, it is Nike. Nike's on Tuesday.
Nike
Aside
has
from that,
earnings?
yeah,
Don't you
Nike
own Nike?
NKE has earnings on Tuesday. Yes.
Okay.
Yeah,
It's
right
actually
there.
at a pivot point right now. That's surprising.
Yeah, it's actually been pretty good because I actually have a covered call on Nike right now for October 3rd for a strike of 85. So I think I did it at like 75, and right now it's like at 60 something, 66 or something, 68.
Kind of a
So
no
yeah,
lose scenario. It's like 85. That's
basically,
massive gains on what your price is right now. If it drops, it basically disintegrates into nothing. Nike is
basically the
literally a
cover.
50-50 split because
Yeah,
you're right at this like gate of the previous earnings. So like you could just flush right back down, or you could try to top these highs and go to 85. So it's gonna be very interesting with Nike.
yeah. So that's really the only earnings that we have that's actually relevant up until the bank switches in 2 weeks from now.
Yeah,
So
JP
yeah,
Morgan reports Tuesday the 14th, so 2 weeks.
Tuesday the 14th.
I believe that
Interesting.
is CPI week.
I do believe that's CPI week. Yes, it
Yay!
is.
So jobs and JP and bank CPI and banks. What could possibly go wrong? Said no one ever. I did also
Yeah.
call out on the video that we previously posted that Netflix and JP Morgan tend to run into earnings. So make sure you guys check out Netflix. Make sure you guys check out JP Morgan because they have a tendency to run into earnings. So this is about the time that you want to pick them up if you're looking to pick them up for earnings. And that video will be linked on the bottom left right over here, along with the Discord on the top left, and also the Fear and Greed Index. Throw down in the comment section below what you guys think this thing's going to end, because it's going to be a fantastic time this week, because it's a great time to be a bull in this market, since the bears are still betting on the market falling off a cliff. Most hated V-shaped recovery in the world. Also
I
check
think
out.
we're not gonna head anywhere with it, by the way.
You
I
think
just realized I
you
never
just
give you
think
an
of
answer.
50. All right. Well, make sure you guys check out the video, check out the Discord, check out the other video we posted right over here for you, and have a wonderful start to your week. And we'll see you in the next one.